Welcome to the Pipnotic Symposium for the 13th of March 2018. Today we are going to have a look at the course strategy. I'm doing this because we've had some new signups, and so I want to reiterate this. And I'm going to do it very briefly, very quickly, and I'm hoping that this will help the new guys to kind of understand what's going on and what we do here. This is not going to be one of the numbered videos that we are currently doing, so this is not going to be a continuation of our video series. This is simply kind of an ad hoc video that we are going to use to help, as I mentioned, the new guys kind of get up to speed. Okay, so first of all, the software looks like this. I hope you've had enough time to have a look at the software. And the software is simply showing us a lot of things. Actually, it's showing us supply and demand that's qualified on the different time frames. And this is very important for us for obvious reasons. First of all, we want to notice that the rectangles are below price on this chart. So what does that mean? Well, that obviously means that we want to buy. Selling now is going to be much higher risk. Just to kind of help drive this point home, you can see this orange rectangle. This is weekly supply. Look how price went almost all the way through it on its way higher here, and this is just telling us that we have the flows moving to the upside. And so just keep that in mind. So if you see these rectangles below price and you're trading on, for example, the daily chart, just make sure that you are kind of trading in line with this. You can, of course, trade counter trend, but you have to manage your risk and your positions much more aggressively had you decided to trade in line with what the indicator is telling us here. And so just keep that in mind. That's the number one point here. So what we like to do is we like to zoom out. And so let's go on the hourly chart. So let's assume here for a second that we have a price structure that looks like this. So price has gone up, it's gone down, it's gone up, and now it's kind of moving sideways. What we need to do is we need to identify the current move, and the current move is this one here. You can see that we have a high, we have a low, then we have a new move which goes from here up to here. And so the current move, we have a micro move, which is this one here, the origin of which is down here. Then we have the slightly bigger one, which is up here. So we have a high and a low. We've had a pullback. Looks like price is coming back down, and maybe anticipate price to wriggle higher before continuing lower. Because what you need to do is you need to mark off, first of all, you need to know what direction you want to trade in. And as you saw on the daily chart, we clearly want to be looking to buy for reasons that we can see here. So price is moving higher, flows are moving higher. Keep in mind the fact that we are indeed reacting at this weekly supply, but it's not an interesting one to us. That we have supply, we have kind of this up here, which is more interesting to us. This is probably the better one here. So just keep that in mind. So there's still a bit of room until price manages to reach up here. So there's definitely some intraday trading opportunities here. So if we go back to the hourly chart like so, what you want to do is you want to mark off the low of the origin. We're going to do that both for the low but also the high. And then what we're going to do is we're going to zoom out, and we're going to help answer the question, has price been back here before? And answering this question is simply enabling us to assess if this is a child or a parent. So what I'm going to do is I'm going to zoom out, or I'm going to just change time frames, maybe go to the 4-hour chart and have a look. And you can see, looking at this, that price has indeed been back here. Where has it been back to? Sorry, when did it come back to this level before? It came back to it here. And so this brings our attention to this just here. And this is interesting to us because this is demand, this is a reaction to demand, and this is also a reaction to demand. So you can see how price reacted the first time it came back. We reacted to this child. Now price went through this child and this parent, and now it's getting closer to this one here. And so the area of interest to us at this stage is this one here. Okay, something like that. We put our stop in as well. We've got something like that. So this is the area of demand that we would expect price to react at. Okay, so keep that in mind. If we go to the upside and we have a look here, we can't really see anything here, so we're going to go to the daily, or rather we're going to just zoom back, scroll back like this. Let's see if I can get back there. We're going to go all the way back, or I can just zoom out all the way, just to see if we can see what price is reacting on. You can see it's reacting on this here. So your price come down here, it kind of dropped, accumulated for a long period of time. We've probably got some daily stuff going on here. Let's zoom in so it's clearer. And then price broke away here. And this is interesting to us because this is actually a very good sell. And why is that a good sell? Well, let me show you. Let's remove these, and we're going to assume that we want to sell here because we had an area of supply there, and we want to have our stop here, like so. If you look at this, I mean, this is a very interesting area to us because if people were to sell right here, where would they have their stops? Well, their stops are naturally going to be located above some kind of price structure that's going to protect their stop. And so what does that mean? Well, that means that if a big institution is looking to sell, he needs to find somebody who is going to buy from him. And so when he's looking at a price chart, he's not putting his entry in here and his stop here and just waiting. He is asking himself the question, where can I get liquidity? Who can I sell to? And so he will typically do what we've done. He said, okay, the retail market, they have their shorts here and their stops are up here. So this is a very good place for price to find liquidity because price is going to come up like so. It's going to poke into the stops. What's the stops going to do? Well, if you're selling, the stops are ultimately buying, and so they are doing they're on the opposite end of the transaction. This buying releases liquidity into the market, and this liquidity is liquidity that that is required for the banks to fill their orders. And so the fact that the stops are getting hit buys back the position, and the liquidity that they are buying, that these stops are buying, is coming from the big institutions that are looking to sell just up here. And so the banks need to push price up through a logical area of resistance because this is obviously, as I mentioned, where the retail traders are going to have their stops. So they need to find that liquidity, and they're finding it up here like so. And so they push price through as they've done here. It's super clear. Price went up to the area, and this is where we're seeing a bit of a reaction. So whenever you put an order, it's a super good idea to ask yourself the question, where does the retail market have their stops? Because this is likely where price is going to go, because it has to go there in order to find the liquidity to fill these orders. Okay, so that's what we have there. So we have identified this area here. We found the low here, so this is an area we could buy. We've identified, oops, not that one. Let's find the other one. This one here, we have identified. Okay, let me clear all that off. Identified a place to stop, to sell, and that's going to be up here. Then you have to ask yourself the question, well, has price been back to this level before? Well, if you go back to here, this is not a very pretty area of supply. I mean, there's nothing really in here. The only thing we have that is interesting, looks interesting, is something around here, because this is where we have the breakaway. So we have something here, but it's still not a super area because price just drifted slowly lower here. So I don't like this too much. But what we need to do here is when we do this, it's a very good idea. Let me go to the weekly chart just so you can see what I'm doing here. You want to ask yourself the question, we have a current price move, which is this one here, moving higher. We have a current price move, which is this one here, that moved lower. And so price went down, it accumulated, and now we're moving higher. We have a price inefficiency here, and so price will naturally gravitate through this inefficiency in order to find liquidity required to push price higher. And notice that we have this little orange dot here tells us an area that price has not been back to. All these ones, these gray ones here, price has been back to this area and here. So these are not interesting to us, but price has not been back to here. This is of course on the weekly chart. We go to the daily chart, you can see as a matter of fact that we have a lot of areas that look similar. If we go back here and we have them up and around here, you can see that we have this one here. Price has pretty much been back there. This is where price came up to before retrace. We have this one up here, and then above that we have no supply. We have this important swing point. This is important because price managed to price managed to stay around. It managed to trade around this area and not violate this high for a pretty extended period of time. But notice that there's a lot of trading in and around this area, so this is not very interesting to us. But if you look a little bit higher, you can see that we have price trading up to an area, then price sold off, we accumulated, and then we moved away from here. So the origin of this move originated from up here. This is the high here. Okay, so this is a very likely place for price to react, because if you look at this chart here, you can say we had price had not been back to this level or this level here, and then price finally moved through it, and the origin of the move that managed to take out all of these very important swing lows is here. So this is very likely where price is going to come back to eventually, and so we can expect price to wriggle higher from here until it gets back up to here. And if you go on the monthly chart and you have a look, let me zoom out a bit. We want to identify what currently is driving price, and you can see as a matter of fact that price is moving higher pretty nicely. We're reacting at these highs of this area of monthly demand. We found liquidity here. You can see that the lows, this is the lowest low, so price went higher, it came back, it touched an area. This is pointing to the edge of the buy zone. It goes and price comes back where to the exact same area. This isn't magic, it's just learning how to read a price chart by focusing on something you can't actually see. You can't see liquidity on a price chart, but you can see that the traces that liquidity leaves as as orders are filled on their way higher and lower. So price came back down here. This was the edge of the buy zone. Price managed to feed into it, and then it left. So currently we have demand in control, and so price is likely going to wriggle higher for a period. We're probably going to move through this pretty easily. Then we have this one here. This is the origin of this move. So this is where we expect price to return to before we either move a little bit higher, but I think we're certainly going to have a reaction just up and around here. Okay, good. So going back to what we talked about, we found the origin of this move. We have this one here, and we use that to help us assess if price has been back here, and it has here. So we want to go lower in price, just as we did here. There's no point in buying here or here. You want to go back to the lowest low, because this is where price has gone back to. Here we have the very nice demand. Price accumulated for 1, 2, 3, 4, 5 periods. Then we left very quickly. Price pulled back. It found liquidity just here, and then it left, and it has not been back since now, or a few months ago. Price came back down here. We filled orders here. We sat on the area. We accumulated for one period. We left, accumulated, and now we left. Now price is off to the races, and now we're in the process of rebalancing price. So parity for this price imbalance is going to be up around towards these highs here, close to these white candles at the top. Okay, and so knowing that price is moving higher, we use this information to position ourselves. So do we want to be selling here? You could do, but you'll also be trading against the major flows. It doesn't mean that you can't, it just means that you're going to have to trade, you're going to have to manage the trade a little bit differently than you otherwise would had you been trading in line with the major flows. So you can certainly trade here. Just keep in mind the fact that price is on longer term trading higher. So, but you could certainly take this. This is a nice price, has not been back to this area since it was established. Is a nice high, so we're likely going to get a reaction up and around here. And I can see that we have a this is a 4-hour area with 2 hourly areas nested within. So this is a nice area that we could certainly try and trade. But you can see this one here, this has been tested once, twice, so you don't want to trade this again. The next logical area to trade would be this one, keeping in mind the fact that price has already been back here, over here to the left, and so you might want to consider going a little bit lower down here and putting your stop down here, like so. And so that's what we have. So we have that now, and we'll wait and see what happens. We have this one here. So price has not been back here, and then price has not been back here. So this is more important than this, okay? Because this is a very nice clear price swing. Price comes down, it goes up, it goes down, it goes up, it goes down, it goes up. These are very important to us. And this one here is important because when price left here, we managed to move below this area of child demand. And when price left here, we managed to move above these highs. So this is an important one. More importantly, this is the important one because this is actually the parent, child, child. Okay, so keep that in mind. And so we have this daily area with 3 4-hour nested areas of demand in here. So this is a higher risk trade, this is a lower risk trade, and this is higher risk because if you consider for a second, this is a nice clear swing, and it's a clear swing because we have this little, we have this little dot here that tells us that. But what we do have, we have price going down and going up, down, up, down, up, and our price is kind of drifting sideways. If you consider this like high probability, so 10, and this is 0 up here, so price is currently reacting at about a 5.5 or a 6, let's say a 6. And so the further price has to travel, the better. So currently we're at about maybe a 6.5 here. And so down here, this is likely a better area because price will have to come all the way down here. And the lower price comes, the more attractive the price is, and the more people are going to want to buy. Okay, and so if price comes back down here, I think we're looking at a higher likelihood of a reaction. Keep in mind that if we zoom out a little bit, you can see that, I mean, this is where we have a very nice pullback. I mean, price, you know what, I'm going to turn this on so we can get away. Let's find the good clear ones. So here we have a nice swing. Here we have a nice swing. Below that, we have this one here. These are no longer valid. Why? Because price has already moved below them. This is why they're gray. And so this is a nice area. This is a nice area. And this is a minor swing in comparison to this one. So this is like the bigger bodied swing, like a really big pullback, then release. Another one here. We have another high here. This price has not been back here. It's orange. Price has been back here, so it's gray. And so you want to look lower. So this is a natural place for price to grab it to, this one here and this one here as well. But you need to answer the question, has price been back here? And this is why I use these horizontal lines. And so by putting it here, as we did it a second ago, we asked ourselves the question, has price been back here? Yes, it has. It's been back here. Okay, good. So for this price structure, standing on this leg, price has not been back to this level here, which is why we focused on this little 4-hour area here, small continuation pattern. And this is interesting because it's still uncharted water. So for this price structure just here, this is the beginning of the buy zone. We have another one here. We have a little better one here because this is a nice clearer swing. So price had to come down, a nice pullback, price seeking liquidity, and then it left. And so we can expect a small reaction here potentially, and better reactions here, here, and here, and down here, and down here. And you can also see that these are where some of these bigger daily areas are located as well. So you want to keep that in mind. Let's go to the higher one here. This is the daily chart. You can see that we have a nice clear swing here. So this is going to be a natural place for price to come back to. But you can certainly see as well that, I mean, we have these red and orange triangles below price, which means you want to be buying, as we spoke about earlier on. But you do have a few options in here. Okay, and so when we identify an area of supply or demand, then you want to look at the quality checklist and ask yourself a question about the area that you've identified. Okay, let's say for a second it's this one here. Let's go to the 4-hour chart. Say, okay, what does this look like here? Then we have a checklist, and this is in the member section. See, how did price leave the area of accumulation? Well, it left it very strongly. You can see that price really moved away from this area very quickly. So, that was a very good call. Did price consume opposing supply and demand, or did it cause market structure to fail? Well, let's have a look. We marked off this line here. Let's remove the blue one. Oops. Let's put this on here. We have to see market structure to fail. So we have to go like this. Did it cause market structure to fail? Well, we had, when price left here, we managed to kind of move above these highs here. So this is a pretty important area to us. But the reason this is interesting is because the origin of the move that caused price to move above this high, turn this purple gray, is down here. Okay, so this is an important point. So while this did cause market structure to fail, the origin of the move is down here. How long did price accumulate? If we look at this, how long did price accumulate at this area here? We had 2 periods. This is good. It's less than 4 or less, which is fine. How far did price go when it left the accumulation? It went pretty far. You can see that. It went very far, very far higher, and it traded away from the area before trying to come back. And you can see the price came back once, twice. This is a 3rd time, and now price is maybe looking to have a dip in here somewhere before it continues moving higher. How long did it take for price to reach M? Well, you can see that M being the distance away, price went over here, and it didn't take more. We had, let's measure the size of this. We have 43 pips. So price managed to go, almost 4 times that within 4 bars, 5 bars. So that's a very nice push away. Has price been back to that area? It hasn't. Price has only been back to here. It's only been back to the low of here. So you wouldn't want to take this one, but you would want to take a price level lower than the lowest area of demand. Why? Because this is the picture of orders being filled, and this is the demand. This is the demand. This is orders reacting to demand. Here, here, and here. What does the area look like on a micro level? And this is when we go down, we study it on a smaller time frame. We'll just go 1 period smaller. You can see it looks like this. Okay, so you can see that price went up, accumulated, went up, went down, went up, it went down. But if we go to a half-an-hour chart, you can see that. See how price went up and then it went down. This makes me a little bit nervous because price tested the lows here. You can see that price went up and went all the way down here. So this would actually make me move my entry to something like that. But then we have no place to put our stop, you can see. And so what I would probably do is I would move my entry to a place similar to this. Do something like this. Like this. This would make more sense to me because I don't like this so much. It's too much of a up and down movement, where this one is went higher, we came down, went higher, came down, and went higher. We didn't have price going up and then down, back through these lows, higher, back down through these lows. You see the lows continue to move higher, which is telling us that we have demand in this area here. So that's better. Let's go back, look at the last one. How far has price had to travel to reach accumulation? How fast has price had to travel? It actually, let's go to the 4-hour once more. It had to come pretty far. It went, if we consider this to be the low, so this is the 10 that we drew a second ago. Here. This is 0 at the top. Let's mark the middle off here. Oops, that wasn't a very good one. A little bit better, so we have 5. And this is 0. So price is going to have to come to about maybe a 7, I think. So this is okay. This is kind of in the lower half of this spectrum. So this makes me feel more comfortable. And so, yeah, so I think this is this is an interesting area. Also, I mean, when price left here, we cause this price to move above this, which is good. So there, I prefer this one more than this one for the reasons that we discussed earlier when we went down and had a look at it in a smaller time frame. It becomes pretty clear to us when we do that. Cool. Okay, well, I think I'll leave it at that. If you have any questions, send them in, and I will get another symposium out here before long, maybe in the next few days, and then we will continue on with our accumulating our sample size of trades. Anyway, thanks for watching, and I'll see you in the next symposium.